Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Wednesday, the 26th of July, 2017, and we're getting on to 2:30 p.m. Central Daylight Time. So let's talk Fed talk before we go to the charts at all. And here's the highlights of the FOMC. They left the target rate right unchanged at 1 to 1 1/4. The committee voted universal, 9-0, against, not opposing today's action, to do nothing, folks. It says that it should shrink its balance sheet soon. Remember, I gave you that word soon? That was going to happen. The labor markets continue to strengthen. Duh, we know that. It sees expanding household and business spending. Okay. It concedes, big word, concedes that inflation has and is declining. That is not what they want. They continue to expect to see inflation rise to 2% over the medium term. I don't know what medium term is, nor do I know what transitory means when they use those words. The risks to the economy are balanced, and they're going to continue reinvesting securities for the time being. Now, what that means is this last part has to do with them wanting to shrink the balance sheet soon. Many traders are thinking, many traders are thinking that what we're going to have here is a situation where the Fed in September is going to announce dates that they're going to start letting securities run off. Now, what that term run off means is right now they're reinvesting. If you have a 10-year bond or note and the proceeds come due, they're buying again in the marketplace. When they say they're going to run off, they're not doing that. They're letting it just mature and the money goes to them and then it goes back to wherever make-believe areas are. So that is one way for them to no longer be a buyer on the interest rate sector, which in theory takes away their buying and might raise interest rates. But as we're looking right now, here's how I'm viewing how the market's interpreting it. The market isn't believing the Fed. That doesn't mean the Fed's wrong, but they think the Fed's going to be pushed further back. The bonds and the notes are getting a rally. The stock market has given up its after-the-fact big rally because you're off the highs, but you're not lower on the day yet. You could be. The gold market absolutely soared. Gold at $12.30 in the December contract, and that's when the settlement price via Chicago time happens, was around $12.55.70. After that, it rallied to $12.63.40, and it's still up roughly $5 more than that. Silver did something comparable, and copper's just been higher literally all day, as I think you got a lot of people caught short. I'm still trying to figure out why people are so overwhelmingly bullish on the copper, and I'm not a copper bear. But you went up yesterday 10 cents, you're adding to that and not backing off. That's a heck of a lot. Is it getting ahead of itself? I don't know. When I look at the weekly gold chart, I think you'd agree that the market last week got back to the 18-week average of closes, and it's still there. I say we're still caught between $12.95 and $12.05. Those are the rough numbers. When we take a look at the December golden area chart of just closes, you can't get away from the fact that we've gone from 12.20.40 on a closing basis to wherever today ends up, and we know it's not going to be here at the 12.67. It's going to be lower than that, almost $12 lower than that. That's a big break that you're about to see. When you look at the swing line, as much as you have an outside day up, it's false in one area. I'm going to show you. The settlement's not here. The settlement's lower. So you really have an outside day down, not up. Now, you're going to say, I'm confusing you, and I am. It's confusing to all of us because the exchanges in their wisdom settle the market 2.5 hours before it finishes trading. So you get a settlement price, then you get action like today, and the market moves. Your chart is not going to be an outside day up. An outside day up means you took the previous day's low out, the high out, And normally you look at a market and say, it's going to settle higher. Your stock market does that. In this case, at 4 o'clock, if this is where the last trade of the day is at 4, they're going to put a settlement price lower, so you're going to have an outside day down. That puts today's high as a very important number for tomorrow, because that could be the bear trap. If you take that high out in the next 2 days, you move to the upside. I'm sorry it's so confusing. I don't create how they determine settlement prices. It's also going to leave in the chart a funny pattern, because you're going to take this to a higher high, you're going to close under a previous swing line low, and then you might take it right out. So it's going to screw up the swing lines no matter how I look at it. The market is going to fight back to this 100-day average of closes. Now, when it reopens tonight, and here's where you get all confused, let's assume this is where we're at 4 o'clock today, Central Daylight Time, 5 Eastern. And the market opens back there. You're going to be down here, then you're going to gap sharply higher. It's going to create some real craziness on the charts, but it's the way it goes. Let's throw everything I just said out, and let's assume you were in the market bullish just now. Where do you think the market should run into a brick wall? How's about the upper Bollinger Band? That number comes in 1271. You just missed it today. You got to 1269.80. You can certainly hit it tomorrow, but you're right there. What about momentum? Well, this is where I'm getting excited now, because maybe there'll be something out of this to offset that crazy chart action. Let's look at how many days we're over the 80 reading in a row. Would you agree both numbers are over 80 today on the slow stochastic? Both numbers were over 80 yesterday, but not the day before. So there's Monday, here's Tuesday, and here's today. Tomorrow's very important. If the market fails to embed, you just have an overbought condition. If it embeds, even with that crazy pattern, I will be looking hard to try to figure a way to do what? To be playing the market from the long side. Why would I say that? Because what you have is the overwhelming technical rule where slow stochastics, when they embed, dictate the trend of everything else on the chart. When the red line will get back under 80, that situation is gone. Here is a truer market than what we have. This is the ETF of GLD. Now, if you take a look at today's high of 120.15 and you understand the Bollinger Band, do you think some people are taking money off the table up there? I do. And that's because 120.17 is the upper Bollinger Band. Unlike the gold futures, wherever this settles today, that's where it settles. It doesn't have the same rule. When you take a look at what the stochastics are doing, both numbers are over 80. Let's go to the next day, if I can. I don't know why that's giving me a hard time. Could be a battery. Both numbers over 80, and the day before, both numbers were not. So just like the gold futures, that's what you've got. 2 days in a row. You got 1 day in a row in the GDX. Now, the GDX did something very unusual. It poked through both the 100-day and the upper Bollinger Band, and if it settles like this, does this mean it's going to turn the Bollinger Band up? Tomorrow's going to be a very big determining day. Often you have that 1 day up and it pulls right back, just the way you did here. You can get multiple days, you see that? But then it fell apart and went back to that 18-day average. So no matter how I look at the metals, and gold specifically, you have to be a bit cautious here because there's a lot of things that can go wrong with this rally. But who's on the run? The bears are on the run, not the bulls. The gold-silver ratio, and this is Dees versus Dees. As you can see, it continues to correct, and you're down now about 2.5 points. So you need, instead of 78.3 ounces of silver in your shopping cart as you're walking around to your coin shop, to deliver that and say, give me an ounce of gold. Of course, they want commission and so on. You only need 75.7. When we come to the September silver, I see an overbought market in an uptrend. The bias is up as well because you're over the 18-day average. I'm looking for strong resistance at 1681.10 if the market can get up there. The copper market, 2 days up and over the upper Bollinger Band. But here's an event that you study. Look at how the market is now over not only the band, but it's pulled it out. That's what I was just saying in gold. This is going to create a situation in the market where even when it corrects, it's probably going to have a great difficult time getting back under this level, because what it's saying is it's breaking out to new heights, and the correction low probably won't take out a previous break low. In other words, copper's trying to set a new range for pricing. In the platinum market, you fell back today, held the 18-day average. 919.30 was the low, 919.80 the number, and you've bounced from there quite a bit, actually. You're up off that low, what, $12. You've got the pattern of higher lows, higher highs. Admittedly, you are very overbought. The palladium market tried to get to this 18-day average. It missed it by 3 ticks. But the point is, are you understanding that 18-day average, how it comes in and the importance of it? Now, if the market can lift itself further, the upper Bollinger Band becomes in play. What you don't want to see is today's low taken out, though, if this is how the market's going to settle. And I did not, I want to make that clear, look to see where platinum actually was at 1230 today. I'm not sure if it was higher or lower. I think it was higher most of the day. In the SEP dollar index, you went down just moments ago under yesterday's low. You have an embedded reading. So the problem in getting short right here is that you're looking for 93.22. The market hit 93.22, the lower Bollinger Band. You've hit your downside target. It's a hard market to get short. It's one that I had alerted my subscribers I was looking at, but there was no way to get it. After the statement came out, it was just moments before the markets were on their way doing whatever they did. Be careful here, because you're starting to lose momentum in this market, the stock indices. An interesting day would be if you closed lower in the S&P or any of the others. Look at how the Russell's giving it up. So far, the NASDAQ and the Dow, the two strongest. We'll see what the metals do. We know where they're going to settle already. You can get that. And we'll see if we get some plays here, especially take a look at the euro. That euro's 117.55. This is a market that was lower going into the report today. It came up 70 points from those areas. Wow. It was actually more than that because it was lower. Now it's up 72 on the day. Let's talk about events. My market research, because I'm going to be writing about all this tonight. I'm already writing and explaining to people in tonight's letter about big oil. You know, all we hear is about shale. What about the big oil boys, the guys that are drilling those deep wells, be it in the water or land wells, real big ones? What if I told you they're on fire? They're expanding in a big way right now because they see an opportunity. They're able to do what we call satellite wells. I explain what all this is in tonight's report as well. So for those of you that want to read my research, get an idea of what I do, well, it's really simple. If you haven't tried it before, I'll give you 22 free days to it. That's 20 days actually, but it's roughly a business month. You call us. You go to our website. You'll be able to see there the offerings that we have. You can click right up here if you're watching me on YouTube, or underneath us right here. It says click for Ira's free offers. Just click that if you're on a different website, and bang, you'll be able to get what you need. Take a look at what I offer, and then join me in the morning for my subscriber video. One other thing I'm looking into now is the fall's coming, doing regular live webinars. But the people that get in, well, the only people that are going to get in are the people that I let in. It's a select list, and we'll talk about that as time goes on. That's, by the way, where I say buy here, sell there, exactly do this, and here's a stop, here's what I'm looking for. I'm Ira Epstein. Talked enough. I will see you at the end of the day in my financial review. You take care.